all-cash offer. Importantly, this transaction will serve to accelerate a full recapitalization of our balance sheet. After retiring costly term debt and other financial obligations, we expect to bring approximately $90 million of cash into our business at the closing of this transaction. The transaction with Safety-Kleen is expected to close during the third quarter 2021, contingent upon regulatory clearance, various customary closing conditions, and the approval of our shareholders. By year-end 2021, Vertex will become a pure-play refiner of renewable and conventional feedstocks. Our streamlined asset portfolio, simplified capital structure, and strategic focus on energy transition opportunities represents a wholesale transformation of our investment thesis, one that positions us to create measurable value for our shareholders as we enter this next important phase of growth. We are structuring Vertex to become an energy transition company of scale, one focused on driving profitable growth through high-return organic and inorganic investments. In conclusion, I want to congratulate our team on their outstanding performance during the second quarter. We executed our own plan, beating street consensus EBITDA by a significant margin, simplified our capital structure with the full conversion of all remaining preferreds into common equity, negotiated a major asset divestiture with Safety-Kleen, and continued to move forward on our acquisition of the Shell Mobile refinery. It's been an exciting period for our people, one that reflects the team's ability to simultaneously manage a complex series of independent decision points. I'm proud of what the team has accomplished and look forward to building on this progress as we move into the remainder of the year. With that, I'll hand the call over to Chris for a review of our recent financial performance.
Thanks, Ben, and welcome to those joining us on the call today. For the 3 months ended June 30th, 2021, the company reported a net loss of $16 million versus a net loss of $8.9 million in the second quarter 2020. Vertex Energy generated income from operations of $1.6 million in the second quarter 2021 versus a loss from operations of $8.6 million in the prior year period. The company reported adjusted EBITDA of $4 million in the second quarter 2021, including $1.2 million of transaction costs for the 2 transactions that are underway, when compared to a loss of $5.3 million of adjusted EBITDA in the prior year period. Vertex generated free cash flow of $1.1 million in the second quarter 2021, the second consecutive quarter of free cash flow improvement. During the second quarter of 2021, a combination of improved refined product margins, sales volume growth, and strong operational reliability contributed to a year-over-year improvement in operating income and adjusted EBITDA when compared to the prior year period. As of June 30th, 2021, the company had total cash and availability on its lending facility of $15 million and $3.2 million respectively. Total cash and availability at the end of the second quarter included $11 million of total cash limited to use by the 2 SPVs. Vertex had total long-term debt outstanding of $6.9 million as of June 30th, 2021. Effective on June 24th, 2021, as to the Series B1 preferred stock, and June 25th, 2021, as to the Series B preferred stock, the automatic conversion provisions of the Series B stock and B1 preferred stock were triggered, and the outstanding shares of the company's Series B preferred stock and Series B1 preferred stock automatically converted into common stock of the company. As of June 30th, 2021, all issued and outstanding Series B and B1 preferred stock had been converted to common equity. As of June 30th, 2021, there were 59.9 million common shares issued and outstanding. With that, I will turn the call over to the operator as we take questions from those joining us on the call today.
Certainly. Ladies and gentlemen, the floor is now open for questions. If you have any questions or comments, please press *1 on your phone at this time. We do ask that while posing your question, please pick up your handset if you're listening on speakerphone to provide optimum sound quality. Once again, if you have any questions or comments, please press star one on your phone. Please hold while we poll for questions. Your first question is coming from Amit Dial. Your line is live.
Morning. Thank you for taking my questions. It looks like, all the strategic transactions are still on track. Then in terms of your expectations for additional CapEx, et cetera, for the mobile refinery, I mean, is there any change to that? Are you still sticking with, the roughly $85 million number initially that you need for the hydrocracking unit? Is there anything else that might come up that, changes some of the expectations on that front?
No, I mean, I think the conversion is the real focus. There is maintenance capital that will be, part of the business, obviously going forward, and that's not going to change. The work is in the fairway. Things are going extremely well related to the conversion, and I would say we're in the zip code of what we anticipated. So things are progressing as good as we could expect on the technology for the plant.
Understood. So, if the UMO assets, the recycling assets that we have right now, that transaction with Clean Harbors closes before September 30th, there's a gap of roughly a quarter before the next transaction closes. I'm just trying to see, how we should be modeling for this interim period between these two transactions closing. Any thoughts on that?
Yeah, the Clean Harbors transaction is progressing on schedule, probably towards the back end of the quarter. And I would say if, a couple of things, clip off here on the Shell transaction, we hope to be in the front of the fourth quarter. So I'm not sure how much of a gap is our expectation. We're trying to bring them both in the same, time frame if we can to reduce that. But, there certainly needs to be a conversation in the event that, something that, we don't control separates those two transactions from what we think is going to happen. So we can talk about that offline for sure.
Yeah. I think most of my other questions, we've already modeled for that transition, et cetera. And I guess my other questions
Yeah, I lost you. I couldn't hear what you said. Could you repeat the question?
Yeah, I was just saying that we've pretty much modeled for the transition, for the new mobile refinery. So my other questions, we can take them offline. That's all I have for now. Thank you.
Oh, okay. No problem. Thank you.
Yeah.
Thank you. Once again, ladies and gentlemen, if you have any questions or comments, please press star one on your phone at this time. Your next question is coming from Eric Stein. Your line is live.
Good morning, everyone.
Morning, Eric.
So I apologize, I jumped on a little late here, just given earnings season, but was curious, as you think about the Mobile refinery, I know on the last call you kind of mentioned the hydro treater being a Rolls Royce, and maybe could you just go into a little bit why that's important in terms of producing the renewable diesel, and then I'd also love to just hear kind of the setup or how you feel about having ample hydrogen production.
Yeah. Okay. So this facility is unique as we see it, because the hydrotreater had a unique function inside a regular conventional refining asset that's making motor fuels, gasoline, diesel, jet fuel. The mid-grade, the vacuum gas oil, was is going through this hydrocracker for the purpose of making a heavy olefin chemical feedstock. So it had a chemical focus or a chemical purpose. So the design of this cracker and the operations of this cracker has had its own separate focus. So the refinery is very skilled in operating this hydrocracker. It's got all the, let's say, bells and whistles for its service today. And a lot of those attributes around the equipment and the design of the plant lend to, a very good renewable diesel production unit. So there's not a lot of reinventing this process or retooling at a very severe and expensive and time-consuming basis. So we're very fortunate that the asset that we're acquiring already had a big head start related to the way the plant operates today with this cracking unit. So that's when you think about the work involved in making renewable diesel, this is a big head start for us. So we're very thankful for that. When it comes to hydrogen, renewable diesel production is very hydrogen intensive. So the other good point to make is when we get this hydrocracker, we also get the hydrogen production that's on site that is being used in that process. So it allows us to quickly come into the market with a meaningful level of production at 10,000 barrels a day. So we don't have to go and create any new hydrogen to do that. So that's another big positive. Now, we will upgrade the production capacity to 14,000 barrels a day, and this will come by adding additional hydrogen generating capacity that actually will be fueled by the co-products that come off the initial process. So we'll be able to make hydrogen using renewable propane and renewable naphtha, which are both co-products in making renewable diesel. So that's going to be a capital project that is done through a partnership on site, where they will provide the additional capacity, and that will come to us just like it does today in a cost, a tolling cost for the hydrogen. So that's the plan, and that's how we go from 10,000 barrels a day of renewable diesel production to 14,000 barrels a day. Does that answer your question?
Yeah, no, that's helpful. I mean, I know that those are the hydro cracker and hydrogen are two areas that it's somewhat for others who have gone down the renewable diesel route, it's been a bit of a roadblock or caused some bumps. So good to know that those are both in place. On the hydrogen side, though, you mentioned the additional investment. Is that something, so that's above and beyond kind of the CapEx you've talked about to bring on the hydrogen for that additional renewable diesel capacity?
Yeah, we have a term sheet that is being finalized with a third-party supplier of our hydrogen, where they're handling the CapEx to install the additional equipment.
Got it. Okay, that is helpful. And then maybe could we just talk a little bit on the feedstock side? I know that at Myrtle Grove you're upgrading the pre-processing capabilities. Is it too early, or how should we think about how much you may source from Idemitsu Kosan, or that you would source from yourself?
Well, let me be clear. The relationship with Idemitsu has nothing to do with the feedstock. So they are our offtake partner. So they will take all of the renewable diesel production. That's what the Idemitsu relationship represents. So our feedstock, both what we start the refinery on, which would be a refined bean oil, like a canola or a soybean oil or maybe a technical tallow. That feedstock will come from your major producers that will supply directly to the refinery. Myrtle Grove will function as a pretreatment unit that will process second generation feedstocks that need work before you can send them to the refinery. And so that's what the investment at Myrtle Grove will represent. So we have finalized the technology work around the pretreatment operation and the design of that plant. And so today we're working on the OSBL, or the outside the battery limits, as far as the 41-acre site and all the connecting infrastructure that needs to support that pretreatment unit. And so we've contracted with our EPC firm that is doing that work as we speak. So everything is underway and in the fairway related to the pretreatment expansion at the Myrtle Grove site.
Got it. Thanks for clearing up that misunderstanding for me. So just, I guess, last one, just on Myrtle Grove. I mean, is there a way? Is it too early to quantify what the feedstock benefit would be, or the pricing benefit? Because I know you'd be able to use things that are lower cost, or feedstock that's lower cost versus, say, soybean oil, which I think prices are pretty elevated right now.
Yeah, no, that's a good question, and that will continue to the net value of pretreatment will continue to move based on more specifically the LCFS credits that are provided by California, and so you pick up a benefit because you're processing second generation feedstocks that are beyond your first generation feedstocks, and the model is in the 40-45 cent per gallon range from an improvement in value. So it's today it's significant. We anticipate LCFS to fall back from where it is today as more and more producers land product in California. So and then we also are expecting more LCFS markets to open up in the future. So that's currently where it sits. I think it's our production capacity for the site is currently planned to be more than the feed that we need at Mobile. So we hope to have material business and process and the second generation feedstocks, where we believe as a company we've got a very strong core competency around that area of the business.
Okay, thanks a lot.
Thank you.
Thank you. Your next question is coming from Brian Butler. Your line is live.
Hi, good morning. Thanks for taking my questions. I too apologize if I repeat anything. I had some overlapping earnings calls as well.
No problem.
I guess just on the first question, just with the inflation, could you talk maybe about a little bit of inflation, if you've seen any pressures in the second quarter, and then just thoughts on what could that mean for the planned upgrades, the $85 million for the hydrocracker and the $40 million for Myrtle Grove. Is there potential upward pressure on those costs or delays as labor availability has been kind of an issue?
That's a good question, because we definitely see some shortage around materials and what people are typically experiencing. But based on our timelines, our suppliers of long lead equipment, et cetera, are very comfortable with where our equipment needs are going to land. We thought we were going to run into more of an issue, but as we sit today, I think we're okay. I don't have Dave Phil on the call to speak exactly to, the supply chain, but I did follow up on that with him, and he and I discussed it, and he felt like our schedule is firm today, so we don't anticipate, that being a problem related to the conversion of the project. So I think you've probably seen an increase of bean oil prices. So this comes back to, the global markets for soybean oil, and so that price has escalated here. I guess a lot of that's related to growing seasons and, many other factors, including, biodiesel producers pressing the markets just like we are, to term up supply, and that's part of it. But the future pricing for bean oil is coming back down, so we don't anticipate that being a material change as we start to plant either. So those, I think so far so good related to the question.
Okay, great. Thank you. I think that was all my questions at the moment. Thank you.
Thank you, Brian.
Thank you. There are no further questions in the queue.
Okay. Well, thank you, everybody. I know this was a short call. The good thing is we're wrapping up another great operating quarter, so I really don't want to I know we're looking forward. I know that, our goal now is very clear on where we're going with the business. But our team did a great job once again, ahead of, plan and executed across the business. Our collection growth, our refining production, I think everybody's done great. We anticipate our quarter ahead to be a fairly full quarter is what our anticipation is, and to, kind of continue the course that we were on in this second quarter. So all is well from our day-to-day business. Our teams are focused on running the business and continuing to execute exactly, to plan. And so everything's in the fairway as we see it on our transactions. And so it's blocking and tackling from here, a lot of work. Simultaneously, so trying to manage all this from a multi-facet parallel standpoint, and I think this past quarter clearly demonstrates our ability to do all this and stay the course. So I just want to thank everybody from the interest in what we're doing and in the future of where we're going. I think it's very exciting, and I believe our team has a foundation deeply set to be very successful in this new frontier. So thank you for joining the call, and if you have any questions, feel free to reach back to Noel Ryan at ir@vertexenergy.com, and we'll be glad to keep you in the loop. Thank you.
Thank you, ladies and gentlemen. This does conclude today's event. You may disconnect your lines at this time and have a wonderful day. Thank you for your participation.